Hello everyone, good morning. Welcome to today's lecture. So today we are going to discuss about audit of NBFCs. Okay, so we will be discussing in detail how the audit of NBFCs work, what are the key things for the audit of an NBFC, okay, how basically it is structured, like the RBI Act, the guidelines from where it is coming, what is, in which particular guideline and how we are correlating everything. It's very important, and on the same time we will be looking the practical part of the same of it. Okay, so one of the important, you can say, chapter to consider. Okay, so yeah, let's start now. Audit of NBFC, when I say audit of NBFC, it's how the NBFC is first of all defined. Then I'll speak about, we'll discuss about from where the requirement is coming. See, when I talk about an audit of a company, we know there's a section 143 in the Companies Act. Okay, when I talk about a company, I know there's a Companies Act is there. NBFCs are also companies. It's not they are not. They are also companies, non-banking financial corporation or non-banking financial company. Okay, but there is an additional requirement in the RBI Act for them to get registered with the RBI. There's an additional requirement they need to follow based on the type of NBFC. So there are multiple type of NBFCs which can be there. Okay, and like a company, private limited, public limited, NBFC's type can also can be different. Okay, so when I talk about type of company, a type of NBFC, they are various types, like systematic, important, non-deposit taking, then non-systematic important, ICC, investment and credit company. I'll speak detail in about that for each type of NBFC, but there can be multiple types, and the requirements for with respect to the net on funds or with respect to the provisioning NBFC. Okay, so when you are going to audit the NBFC, when you are looking for an audit of an NBFC, the prime thing and the first thing you need to see is which type of NBFC it is. What is the nature of the NBFC that you are dealing with? Okay, it can be a housing finance company. There are various type of NBFCs in the market, so there are various. Okay, so now starting from the term itself, which is NBFC. Now, what is NBFC and where it is defined? So the term NBFC, non-banking finance company, okay, is defined under the RBI Act. Now, if you go to the RBI Act and if you refer to section 45 IF, section 45I clause F. Okay, section 45 is basically dealing with the definitions, and the clause F, it talks about my non-banking financial company. Okay, and in that particular one, what it says that the non-banking financial company is a financial institution. Starts with, it's a financial institution okay, which is a company. So financial institution plus a company means formed under Companies Act. It's a financial institution which is a company, okay, or a non-banking institution which is a company which has principal business of receiving of deposits, receiving of deposits, okay, under any scheme or any arrangement, or in any manner, okay, lending in any manner, like accepting deposit and lending, or any such NBFC which is intimated by government in official gazette. So this is a particular NBFC which has a company, has a receiving of deposit or lending, is what you say, principal business. Okay, that's the only definition as of now specified. Now then then it comes like, okay, if this is the definition, then every NBFC is a company. So the audit provisions for the company, okay, the audit provisions for the company will equally applicable to NBFC like they are applicable to the normal company. So provisions from section 139 to 147, or sorry, 148 will be equally applicable to NBFC. Okay, same. So if I talk about a company, 139 will be NBFC 139 will be applicable. If I talk about 140, 141, so it will be applicable. Okay, so all those sections will be applicable to NBFC. Now what I'll do is I'll come to directly audit requirements for NBFC. Okay, I'll come to directly an audit requirements for NBFC. Reason because while covering the audit requirements, we will see each and every area, like around those audit requirements, and we will be covering everything by that way, so that you will be able to understand what the audit requirements are and how they are working. Okay, just give me a minute. Okay. Now, when I talk about audit requirements, so from where these audit requirements are coming, like what if these audit requirements are? First of all, in Companies Act, we have a section 140, 139, 143. Okay, over and above that, as NBFCs are primarily governed by RBI. Okay, majorly NBFCs are governed by RBI. RBI has given some additional requirements with respect to the audit and reporting. Okay, so when I talk about the NBFC, how NBFC works is NBFCs are covered basically by way of three legal statutes or pronouncement, you can say. So when I say NBFC, so the first one is Companies Act, because it's a company. So Companies Act is the one which impacts the working or reporting of NBFC. Second is the RBI Act, because most of the NBFCs are governed by RBI. And third are the master directions, notifications issued by RBI. So from time to time, RBI issues some master directions, notifications. The way SEBI issues regulations for the companies who are going to get listed, same way RBI issues directions, master directions, for the purpose of governing NBFCs. Okay. So now when I was talking about audit requirement, okay, so again here RBI has issued a master direction, you can say. I'll mention the name over here. So this is the RBI master direction. Master Direction, non-banking financial companies auditor report. Okay, so this is the master direction that has been issued by RBI, which covers the detailed requirement that, okay, what are the things that the auditor need to report over and above the things which are mentioned in 143. Now, I just want to ask one question. Is CARO 2020 applicable to NBFC? Simple. Whether CARO 2020 is applicable to NBFC? I want to see how many of us, are pretty much, clear with the concept. Whether CARO 2020 is applicable to NBFC? Okay, Manani, good. Correct, Shailendra. Correct, Boni. Okay, so with respect to the CARO 2020, remember in CARO we discussed the exemption criteria. So let's go back and see those exemption criteria for CARO again. Now, what was the exemption criteria? BIOS, that is banking company, insurance, OPC, small, section 8. If it is a private limited, then it should be paid up capital less than 1, debt less than 1, revenue less than 10. If any of the condition out of these is getting satisfied, then only CARO exemption will be there. Now, when I talk about the banking company means company defined under clause 3 of section 5 of Banking Regulation Act. But when I talk about NBFC is defined under section 45I clause F of RBI Act, and banking company is different than the NBFC. So as of now, I cannot see any exemption given to NBFCs for the CARO from the definition. Fine. Now let's go to the CARO. Now in CARO, there was one of the point, I'll show you. Yeah, over here. Sorry, yeah. If you see, there was para 16 in CARO, which talks about registration under section 45 IA for NBFC, housing finance activity, core investment company, CIC group, and there are other sections which are for this particular one, which are for CARO, NBFC specific. If CARO wouldn't have been applicable to NBFC, then why these particular sections are there or paragraphs are there in CARO? Means CARO is applicable to NBFC. That's why we have a dedicated paragraph in CARO to NBFC. So CARO is applicable. Now coming to the point, then what is the use of this master direction? So this is over and above CARO. Do not confuse that this is a CARO for NBFC. No, this is over and above CARO that we are going to discuss now. Okay, so there is a over and above CARO that is mentioned over here. Clear? So this particular direction is based on section 45 MA of RBI Act. What is section 45 MA? It's the powers and duties of auditors. The same way we have 143 in Companies Act, this on the same line there is 45 MA of RBI Act. But 143 will also be applicable. This will also be applicable. So dual, two sections will be applicable. Okay. So there's a particular section which says that in case of a NBFC, the auditor has to make a report to under various sections and everything. So it's there, like, okay, what are the reports that they are required to provide, and everything is pretty much specified under this particular section. But like over there, if you see the particular section, it says that the auditor has to make a report to the bank, and when they say bank, it's a reserve bank. Okay, auditor has to submit a report to reserve bank in a specified format with respect to the contents of the report that are prescribed in our directions or regulations or something like that, and which goes this one. Okay, 45 MA says that in a prescribed format they are required to report, and this is the prescribed format. Okay, now so let us see what these directions say. So these master directions talks about, okay, what are the reporting that are required to be done. So this is applicable to every NBFC registered with RBI under section 45 IA of RBI Act. So first, applicability. Applicable to every NBFC registered under 45 IA of RBI Act. Okay. Except for, again, any law, any provision is not complete without an exception. Okay, that's why we have an exception over here also. So it is applicable to every company except for which are the companies to which it is not applicable, which are the NBFCs to which it is not applicable. It is not applicable to a mutual benefit company, okay, insurance company, okay, then investment and credit company, okay. Now, when I talk about investment credit company, there are certain conditions which are required to be get satisfied, then only it will not be applicable. So subject to certain conditions. Otherwise, it will be applicable to them. Okay. And these are the three as of now which are excluded from this. A mutual benefit company, okay, like which is like registered for this particular purpose, mutual benefit one. Then insurance company, NBFC company dealings in insurance. Investment and credit company, not holding any public deposit, and certain other criteria are there. If that is satisfied, then only this will be exempted for this particular company. Okay, so it is applicable to each and every NBFC except for these three. Okay, fine. Now, let's talk about what are the requirements of this particular, what you say, this particular directions. Okay. So, the requirement of this particular direction goes like, okay, it is divided into three categories. This particular direction is divided, or this particular direction is divided in three categories. Okay. Number one, applicable to all NBFCs. Number two, applicable to NBFCs which are accepting deposits. And number three, NBFCs applicable to NBFCs which are not accepting deposits. Okay. Now, when I told you about there are various types of NBFCs, so which are these types? And again, why I am coming to that? Because for this particular direction, it's very important to understand how it is bifurcated. And also one important thing is practically over here, I'll tell you this exception basically. Okay. In most of the cases, it's not applicable. Reason because of the amendment. And when I say this particular thing, that subject to certain conditions. These conditions have been, gradually faded out, or, if you see the conditions, they are gradually being removed. And after 2025, as per the provisions itself, these conditions will no longer be applicable. So this will remove totally. Okay. So you can say that this is subject to certain conditions, but as of now, you can, on the same time, you can ignore also, because in most of the cases, it will not be there. This was just for your information. Okay. So I'll write it down over here. Only for information. Okay, fine. Now, when I talk about type of NBFC, because the directions or the guidelines are applicable to various type of NBFCs differently. Here, there is a very important amendment also. Okay, and very important, bifurcations to understand, because this will decide, this will help you to understand how the NBFC structures are basically formed, or, they are classified. Okay. Now, NBFCs primarily are divided into two categories. If I talk about basic bifurcation of NBFCs, they are divided into either deposit taking and non-deposit taking. So NBFCs either they are deposit taking or they are non-deposit taking. Basically, they are bifurcated in two categories. Okay. Now, if they are bifurcated in two categories, after that, there are certain more bifurcations. That is based on their size. This is based on function. Okay, this is based on function. Now, based on size, there are some other bifurcations also. Okay, now based on size means if a NBFC is a deposit taking and if it is important, it may be like, systematically important. There is a term, systematically important. Okay, so NBFCs which are what do you say, like they have a such quantum of their activity, turnover, accepting deposits or something like that, there is a quantum defined, so they are known as systematically important NBFCs. But whereas I talk about the non-deposit takings, so non-deposit taking are by default majorly classified into non-systematic, non-deposit taking. So they are known as non-systematic, non-systematically non-deposit accepting. Okay. So that is the one. And when I give this name, non-systematically non-important deposit accepting or systematically important, how they are named. So based on that, they are named also. For example, in short, when I talk about NBFCs which are deposit taking, which are systematically important, they are usually known as the, give me a minute. They are known as NBFC SI or NDSI or SIND. Both are fine. So SIND. NBFC systematically important ND. That is how it works. Okay. When I talk about non-deposit taking, non-systematic important, they are known as NBFC ND. That is non-deposit accepting. Okay. Same way, there can be other type of NBFC also, which is like, they are deposit taking, but they are not systematically important. So they will be deposit taking, but they will not be systematically important. Okay. So, sorry, this is deposit accepting, so NBFC SI. But if it is non-deposit accepting and important, then it will come into NDSI. Now, can there be a company which is non-deposit taking and again systematically important? Yes, there can be a company. If a non-deposit taking and systematically important is there, sorry. If it is non-deposit taking and systematically important, it will be known as my NBFC NDSI. Okay, like this way. Very good question I have received. Whether all NBFCs are required to get registered with the IDA, I'll come in a while. I'll come in a minute on that. Very important. Okay. I'll come on the registration part because first we need to understand which are the type of NBFCs and then we'll go to the registration for each one. Okay, fine. These were the NBFCs. Now, other than that, there are other kind of classification also. There is other kind of classification. classification based on function. We saw classification based on classification based on, we saw on function, or you can say size, rather than I'll use the word size over there. Size. Okay. Now classification based on function. Now what is classification based on function or activity, you can say? So there are certain NBFCs which are formed for a specific purpose. Deposit, lending, it's another story. Specific purpose, like investment and credit company. They are known as NBFC, ICC. Then infrastructure finance company. Okay, that is known as NBFC, IFC. Then we saw in systematically important NBFCs, but there is a core investment company. That is known as NBFC, CIC. You will see this word NBFC CIC in Caro also. There is NBFC CIC. So there is a particular specific requirements for NBFC CIC. Okay. Then there are microfinance institutions or microfinance companies, but they are known as the microfinance institutions. So that is NBFC, MFI. Okay. Then there are factor companies. That is known as NBFC, factor. Okay. Then there are operating finance holding companies. Operative finance holding company, that is known as that's non-operative. My mistake. Operative are the rest of the type. This is a non-operative type. Okay, so that is known as NOFHC, NBFC, non-operative finance holding company. NBFC-NOFHC. Okay, this is some of the kind. Other than that, there are housing finance institutions, there are merchant banking companies, then there are certain kind of other NBFCs also, okay, which venture capital, Nidhi, insurance companies, chit companies. These are certain other mutual benefit companies, mortgage guarantee companies, alternate investment fund companies. So there are various type of NBFCs, but these are some primarily which are classified based on the function. Okay. Now the question is, there was another important question, that whether all deposit taking are systematically important. Answer is no. See, when I talk about systematically important or systematically non-important, that totally depends upon whether what is the type of activity. Like here the function, and it is based on this one. But here, if they are deposit accepting, and if they have that much quantum of their activity size, they have that much size, then they will become systematically important. So it may happen that NBFC can be there, which is accepting the deposit, but it may not be systematically important. Okay, so it will be deposit taking, but it will not be systematically important. Now you will say, why I was specifically not written that one over here, that it is systematically not important. Okay, but it is deposit accepting. In that case, when an NBFC is deposit accepting but not systematically important, it's a normal NBFC. So if I talk about non-systematically important, but it is deposit accepting, then it will become my normal NBFC. So because if you see the definition of NBFC, it is that it accepts the deposit. If it is not important, normally accepting the deposit, it's a normal NBFC. That's why I specifically left that out. Clear? Clear? Okay. So there is one doubt. If an insurance company is an NBFC company, then how that is exempted under particularly car? Okay. Now, see, insurance companies are not NBFCs. Okay. But there are certain can deal in insurance. There is two difference between them. When I talk about insurance companies, that is separate, which are registered with the insurance regulatory. Okay, Insurance Regulatory and Development Authority, IRDA. That's a separate. They are companies, but they are not NBFC. See, company can be NBFC, can be insurance company, can be banking company. Okay, and when I say about insurance company, okay, that's a registered with IRDA. Fine. When I talk about NBFCs, there are certain places where NBFCs can deal into insurance, but again, that is a different level of discussion, because there are some different guidelines which are into the place, which again restricts an NBFC to deal appropriately in insurance. They can, but there are very strict restrictions on that. Okay, so that is there. So when I talk about insurance one, I'm talking about that category which falls and satisfies all the criteria of those particular notification, directions, and everything. Different level of topic. Okay. Now, okay. So NBFCs, Caro applicable. Now the question is that if I talk about size for systematically important, what is the threshold? It's not only the threshold which defines the systematic importance. For your easy understanding, I have mentioned the size, but I'll come in a while on that particular topic, which is a systematically important, which is not a systematically important. So don't worry, I'll come on that topic. Any doubt till now? Any doubt? Okay, good. So we understood the type of NBFCs. Okay, fine. Now let's go back to the audit requirements. I told you for the audit requirements, what was the scenario is, it is applicable to different type of NBFCs differently. Okay. Now, when I talk about audit requirements are basically divided into three categories. That is applicable to all NBFCs, applicable to all NBFC companies, that is there, applicable to NBFCs accepting deposit, And third one is applicable to NBFCs not expecting public deposit. Okay, so there are three type of requirements under this particular one. As of now, I'll remove this one because this is most probably will not be applicable going forward. I'll remove it. Just a minute, let me make some space over here. Okay. We talk about the applicability, applicable to all NBFCs. Okay, subject to, as of now, just forget it because that is going forward will be removed. I gave you just for your information. Okay, so it is applicability to every NBFC. And when I talk about every NBFC, means auditor of every NBFC. So I'll add it here. Applicable to auditor of every NBFC, because then we need to, as an auditor, we need to report this. So when I say NBFC, means every NBFC, but auditor needs to report this one. Very important is auditor. Do this. Every NBFC registered under section 45 IF or defined basically under 45 IF of Reserve Bank of India. Both are fine. Okay. Now, so requirements, which is one is applicable to all NBFCs. What is the first requirement? Let's go now the requirements of reporting. So auditor needs to report on the account of the NBFCs, okay, which shall include a statement. So this is required to be reported in a form of a statement. This should be in the form of statement, okay, for every NBFC. And what should be in the statement? That for the all NBFCs, what auditors are required to report, that whether NBFC is carrying out the activity without a valid registration of certificate of registration. Okay, so if an NBFC is conducting their activities without a valid certificate of registration, then they need to report over here. So first one, whether NBFC has obtained valid certificate of registration, COR basically is known as COR, from RBI. Second, whether NBFC's activity or principal business are meeting the criteria that it is entitled to continue to hold COR. So whether NBFC is entitled to continue to hold such COR. Now, to report on these areas, whether NBFC has obtained valid COR or it's entitled to continue to hold such COR, we can only report when we know which companies or which NBFCs are required to obtain COR and when they are required to obtain a COR. So let's understand the certificate of registration requirement. Okay, certificate of registration for NBFCs. Now, when I talk about certificate of registration for NBFCs, okay, there are two requirements. One, requirement prescribed under RBI Act. Second, requirement prescribed under master directions issued by RBI. Okay, so first I'll take the RBI Act. Section 45 IA of the RBI Act lays down the requirement of registration and net own funds. Okay, that particular section provides, okay, if an NBFC want to start their business or want to have their, conduct their business principal activities, whatever it is there, they need to be registered with RBI and they need to maintain a certain amount of net own funds. Okay. Now that says that that particular section says that no banking finance, no non-banking finance company, that is NBFC, shall commence or carry any business, okay, any business of NBFC without certificate of registration. So first requirement is no activity without COR for NBFC. No NBFC activity without obtaining COR from RBI. If you do, you will be, there are penal provisions that will be applicable. Okay. Number two, you cannot commence any activity, no NBFC activity without maintaining net own funds. Okay, so as of now, the net own funds should be of rupees 25 lakhs for NBFC. Okay, no activity can be carried unless you have a net own funds of rupees 25 lakhs or such other amount. This is very important, such other amount. I will come on this such other amount. Okay, but there is an upper limit for this. This is prescribed that such other amount, but not exceeding rupees 100 crores. Okay, so NOF should be 25 lakhs or such other amount not exceeding 100 crores. Fine, that is there. So you should have a net own funds. Different categories have a different requirement of net own funds. That's why such other amount is there. Okay, that is the first criteria, that NBFC cannot commence its activity without obtaining valid certificate of registration and net own funds. That is 45 IA1. Now, second requirement for the NBFC is they are required to make a registration application to the Reserve Bank of India. Okay. And that too, they need to, in a specified format with a specified fees. That's everything is there. Okay. Then again, after having this particular fulfilling that requirement and after applying for registration, RBI may grant them registration for a period of 3 years from the commencement of their for such activities. Okay. And there are other criteria that can be there, some period of registration can be there, that every year they need to renew. There are other requirements for that. Okay. Then to apply for a registration certificate of registration or application, they are required to have inspection of the books of account. Okay. There should be appropriate your liquidity for the company should have appropriate liquidity. So there are certain areas which are defined in that particular section, which are required to be fulfilled certain conditions, and not go into detail for that certain conditions. Reason because there are different conditions for different type of NBFCs. Okay. So basically, this is the main criteria. 45 IA, that without obtaining they cannot commence activity, and there should be 25 lakhs or such amount, not exceeding 100 crores. That should be net own funds. Now there is a definition of net own funds provided. Okay, that includes what is net own funds means. Net own funds will be paid up capital, free reserves, plus free reserves. Okay. Less deferred revenue expenditure, accumulated balances of loss. So debit of P&L, accumulated loss. Then deferred revenue expenditure, other intangibles. Then there is a specific deduction from this net own funds that is required to be done for the investment in such companies which is subsidiary or companies of the same group. Okay. So if you have made investment in shares, okay, in subsidiaries or companies of same group, okay, or in NBFCs, other NBFCs, then that is required to be deducted. Okay, so that is basically the net own funds definition. Any doubt till now? Okay, so for your question, Manini, that if they are not registered with RBI, then what are the other acts they are registered with? For example, insurance. If a particular, let's say for example, NBFC there, housing finance. Okay, now housing finance are again regulated by National Housing Bank. Merchant banking, NBFC, SEBI. Stock exchange, if there's a form of an NBFC, but usually stock exchanges are not in a form of NBFCs, but stock exchanges are regulated by SEBI. Okay. If a NBFC is there involved in the stock broking, then again SEBI will come into the picture. If a NBFC is there in the form of venture capital fund or something like that, then again SEBI will come into the picture. Okay. Nidhi companies are directly governed by MCA. Okay. Microfinance companies, again, they are governed by separate guidelines which are issued by RBI. Core investment companies are again governed by separate guidelines which are issued by RBI. So like this way, there are separate guidelines which are there, which are governed, for each and every type of company which is there. They may not be required to get registered under 45 IA. We will see that. But basically, as of now, till the time I do not specify any company which is not covered over here, every NBFC can needs to get certificate of registration. So registration of certificate, prior requirement of NBFC. See, net on funds means what? Why investment in shares and everything is deducted from net on funds? Reason because how many funds do you have with you? For example, I opened a company, NBFC. I brought in 25 lakh rupees. Same way, I invested the 25 lakh rupees in some other company. That is my subsidiary. Okay. As of today, what I will have in my books of account, my capital, that 25 lakhs came via shareholding. That 25 lakhs went into the investment, but I do not have any cash or liquidity in my hand. Same way, another company which may have a 25 lakh that I invested to them, he may invest to someone else. By this way, I can form a chain of NBFCs, by satisfying the net on funds criteria. But in actual, that is the same 25 lakh rupees going from here everywhere. It's going into the, everywhere. That same amount is circulating. That's why if I have invested some amount that I need to remove, just to avoid that circular thing or that, chain cycle thing. I do not understood 50% criteria. Okay. So that was the net on funds. Any doubt till now other than this? Other than this, any doubt? See, other intangibles are intangibles which are, like what you say, not a goodwill or other intangibles, because usually intangibles are something, the amount has been invested, which is not going to come back. You are going to write it off. Okay. So that is other intangibles. That's why it is being deducted from paid net on funds. Okay. Now, let's go back and understand this particular registration requirements, okay, in detail with the help of, there are two regulations. Everywhere I'll use this, everywhere. Okay. So as I said, there are master directions. So there are two major master directions for NBFC. Okay. So one is this. Sorry. That is my master direction on non-banking financial companies. Okay. But that are systematically important one. Okay. And non-deposit taking. So this is the one master direction that is there, that is systematically important and non-deposit taking. Okay. Another master direction that is there, it is this one. Systematically non-banking companies, non-systematically important, non-deposit accepting. So these are basically two for non-deposit accepting. Okay. So non-banking companies, non-systematically important, non-deposit taking. So these are the two important master directions which have been issued and which will help us to understand the net own funds requirement. So here I am talking about SIND and ND. SIND means non-deposit accepting and systematically important. ND means non-systematically important, non-deposit accepting. So as NDSI and ND, NBFC, NDSI and ND. Okay. So when I talk about such other amount, these regulations have prescribed some amount for the registration. Okay, for the registration of NBFCs. So first of all, now when I talk about systematically important non-deposit taking NBFC, so NBFC that is systematically important but non-deposit taking, or some people write it NBFC, NDSI, both are fine. Okay, if it is a NBFC systematically important non-deposit taking, the criteria or the threshold you are looking for, that how can I identify it's a systematically important? If it's public deposit, if it's public deposit, okay, not accepting public deposit, sorry, I'll remove. If not accepting public deposit, plus asset size or total assets, you can say, greater than 500 crores, as per last audited balance sheet, okay, then it will become my systematic important non-deposit accepting. So the criteria is that it should not be accepting public deposits, plus it should be having asset size of total assets of 500 crores or more. Okay, then it will become my systematically important. Otherwise, it will remain non-deposit accepting and non-systematically important if the asset size is less than 500 crores. Okay. So that is the definition of systematically important. And if that is not a systematically important, by default, it will become non-systematically important. Clear? Any doubt? Okay. Now these definitions, these particular regulations specify some other definitions also. Okay, like NBFC, IFC. Remember, we talk about NBFC, IFC over here. So NBFC, IFC. NBFC, IFC means they are not accepting deposits, non-deposit, okay, taking, plus minimum of 75% of total asset, okay, should be deployed in infra loans. So for an NBFC, their asset will be majorly loans and advances given, and 75% of such loans and advances, or more than 75%, should be into my infrastructure loans. My net on funds for this particular company should be rupees 300 crores or above. Minimum credit rating should be A. Okay, there are various credit ratings, but should be A for minimum credit rating. Okay, and CRAR, that is the capital ratio basically. Okay, this particular capital ratio should be of 15%. With minimum tier 1 capital of 10%. Okay, that is the IFC criteria. Clear? Okay. Now, there are other requirements also. For the same way that IFC is there, then ICC is there. Again, ICC is also a company, carrying the business of asset finance and providing loans and advances on financing. So that is ICC. Okay. Then when I talk about MFI, microfinance is also not deposit accepting. Okay, but they have a different criteria for them, that net owned funds should be 5 CR, 75 of the total assets should be under there are some microfinance regulations that should be into that particular area. If the microfinance is in the eastern region, then the net owned funds criteria should be 2 CR. So there are other guidelines. Again, guidelines for NOFHC. So in the same way, like I told you about IFC, they have a guideline for 300 crores and above NOF. Same way, different companies have a different NOF, net owned funds guidelines. Okay. Now, but if that NBFC, okay, if that NBFC is not specified under any of the category, let's say you are not able to specify which type of NBFC. So what is the general criteria for the net owned funds? Then the general criteria for this such other amount, which is here prescribed. Generally, it should be rupees 200 lakhs or 2 CR, 2 crores. So general, as per the regulations, these two regulations I told you, that NBFC, SI, ND regulations, and NBFC, ND regulations. So NBFC, ND regulations means non-systematically important, non-deposit accepting regulations. SI, ND regulations means systematically important and non-deposit accepting. For both of the case, when I'm talking about general NBFC, like which is either SI or NDSI, the net owned funds criteria will be 2 CR. Clear? So CRAR capital ratio requirement is another thing. I'll come into that in a while. Okay. Okay. So 75% of the asset should be the infra loans for that. Okay. So 75% of the asset should be the infra loans. See, why I discussed this definition is just to show you that net on funds requirement can differ from type of NBFC. Okay. Don't focus on the 75% criteria here. The important point is to understand that, okay, net on funds for IFC is 300 CR. Now, same way, okay. If I talk about a company which is, let's say, NBFC, MFI, it will have a net on fund criteria for the normally rupees 5 crores, but if registered, okay, if registered in northeastern region, which is known as the NER, northeastern region of India, okay, then my net on funds requirement goes to the 2 CR. It gets reduced to 2 crores. Okay. So the point is just to show you that, okay, net on funds criteria differ from NBFC to NBFC. Clear? Any doubt? So at times CRAR is also known as a leverage. For those who have a confusion, it's also known as a leverage. Okay. Now, this such other amount is like based on the regulations for each and every NBFC differs. So accordingly, you need to see which NBFC it is there and which NOF amount is applicable to that NBFC. Generally, it's 2 CR for NBFC, SIND and ND. Okay. Now, this was one of the requirements for the certificate of registration, that they should have a NOF. Okay, and without NOF, they cannot continue they cannot start the business activity. Now let's go to the audit requirement. What are the audit requirement that we were looking for? Audit requirement was whether NBFC has obtained valid certificate of registration. And when I say valid certificate of registration, that is, they should comply with the NOF requirement. Then only they can have a valid certificate of registration. So by this way, you will be checking the NOF. Whether they have a valid certificate of registration, you need to check whether they have a valid net on funds. Second, whether they continue to hold such COR, means whether their NOF is still the same or it has been reduced. Or based on their principal business activity. Principal business activity means type of NBFCs. Remember, these type of NBFCs, business activity, investment company, IFC. So based on their principal business activity, whether they are still maintaining that particular NOF which is there, it may be 300 CR, it may be 200 CR, it may be any other amount. So, are you understanding my point? From where we are connecting the things? Based on the audit requirement says that whether they are entitled to continue to hold such COR. Again, you need to check based on the type of the activity of NBFC. Okay. And you need to check this whether NBFC is entitled to continue to hold such COR on every 31st March. It's not there like, you need to continuously monitor on the yearly basis, like, on each and every day, but as on 31st March of that particular applicable year, whether the criteria is being fulfilled or not, because NOF is calculated based on the audited balance sheet or audited numbers. So when you audit, you need to check at that, okay, for current year, whether NOF is satisfied. Yes, good, fine. Okay, then whether NBFC has complied, whether NBFC has complied NOF requirements of NOF requirements of NBFC, SIND regulations and NBFC ND regulations. So the NOF requirements under these regulations, whether NBFC is complied with or not. And again, I'll for your when I talk about NBFC, SIND regulations, that is NBFC SIND regulations, and this is NBFC ND regulations. Okay. Clear? Yes, you need to remember certain thresholds that I will be discussing. Okay. So like I discussed the IFC one, I will be discussing CIC one. So there are certain thresholds you need to remember. Yes, in these two master directions, NOF is defined. Okay, good. So again, in these two master directions, the NOF criteria is defined and that is required to be followed for a non-banking financial company. And even the direction says it, except otherwise, specifically mentioned, this is a common requirement of 200 lakh rupees, that is 2 CR to commence the business. So NBFCs shall have that 2 CR net own fund requirement. Okay. Then so as I told you, that certificate should be on as for the financial year ended as at 31st March. Okay, this is required to be submitted. This particular certificate, okay, is required to be submitted, which is applicable to all NBFC, is required to be submitted within 1 month from the finalization of balance sheet. So if I talk about timeline, within 1 month from finalization of balance sheet, okay, but not later than 30th December, or you can say whichever is earlier, or 30th December, okay, of that year. So whichever is earlier. So whichever is earlier, you need to comply with that particular one. So that's the timeline. You need to provide this particular statement that we are talking about either within 1 month from the date of finalization of balance sheet or balance sheet date or 30th December. Okay. Now, so as I discussed, this certificate is required to be submitted. Now there is a format that is there. There is a format for this certificate. Okay. So this certificate is required to be submitted in a particular format. That is, just a minute. That is SAC1. I will show you. Just give me a second. I'll show you that certificate. Okay. This is the format of statutory auditor certificate. Okay. That is required to be given. SAC certificate that I was talking about. Okay. Which is applicable on 31st March of every year, that is required to be given. That is okay, 31st March. And the auditor is required to say, okay, this was the name of the company. This is the registration number, register address, corporate office, whether the company has been classified by the NBFC MFI, NBFC factor, IFC, IFD, AFC, which is the NBFC, like investment company, like which is the one. Net owned funds, what is the net owned funds? Okay, what is the total asset income pattern, whether the company was holding public deposits. This will decide whether the NBFC is deposit accepting, not deposit accepting. Okay, whether the company has transferred a sum of 20% to its net profit to reserve fund. That is another criteria that we will be discussing. Company has received any FDI classified as a NBFC factor, then percentage of factoring, other requirement for the factors are applicable. If it is the MFI, percentage of qualifying asset to net asset. Okay, if it is classified as an AFC, then other requirement. IFC, then percentage of infrastructure loans to total assets. Remember, I was talking about 75% criteria for IFC. This is the one you are required to report. So each and every NBFC is required to have a different criteria for reporting. Then any takeover or acquisition of the control, say this will they provide you. Master direction, non-banking financial company, non-systematic, important, non-deposit accepting, and non-banking financial company, systematically important, non-deposit accepting. Okay, so these are the one master directions, so you need to refer. Then yeah, so that is one of the written that is required to be provided in this particular way. So this is one part of the written that we discussed, that is the audit requirement for applicable to all NBFCs, applicable to all NBFCs. Clear? So these returns are required to be filed online. There is a portal given by the RBI where you are required to upload these returns. Okay, so there is a RBI website, Cosmos RBI, and you need to upload over there. SAC, which is like the dates, due dates, as I discussed, it's there. Okay, but for each and every NBFCs, again, there are other additional requirements that are required to be given here. So for this particular one, timeline is same, either within 1 month of the finalization of balance sheet or 30th December, whichever is earlier. Okay. Any other doubt? Any other doubt? Okay. So now this was basically one of the requirement of auditor's report that is there. Now let's discuss other requirements of auditor's report also. But before that, what I'll suggest is, okay, uh, let's quickly take 10-minute break, okay, and then let's continue. So let's take a quick 10-minute break. You revise it, whatever we discuss, you also take a break, and then after 10 minutes, we'll continue and discuss further requirements. See, my purpose here today is that, to cover the requirements in a detailed way to make you understand how the thing in the NBFC works. And then we will cover all the questions together back to back so that, once you have all the clarity, it will be easy for you to understand the questions. Okay, great. Let's take a quick 10-minute break. Hello everyone, welcome back. So now let us discuss the further requirements of the particular direction that we were talking about with respect to audit requirements. Okay, that the auditor of every NBFC is required to provide. Okay. Now the second part will be that in case of non-banking companies accepting public deposit, what are the requirements? So in case of accepting public deposit, NBFCs, the first requirement is that the public deposit that are being accepted by the NBFC along with other borrowings. Okay, so public deposits plus other borrowings. Okay, together with other borrowings should be within the limits. Okay, should be within the limits of limits applicable to that particular NBFC. Now the question comes is which limit? What is the limit over here that we are talking about? Okay, what is the limit of public deposits? So there is a separate set of guidance issued by RBI. In most of the cases that I'm discussing over here, okay, the thing is NBFCs are majorly covered by guidances, directions, master directions. Okay, NBFCs are majorly covered by the master directions. So there is a master direction again issued by RBI for non-banking financial companies accepting of public deposits. Now here they have provided the limits. They have said, okay, to which companies is this applicable? Which companies are part of this? Okay, what do you mean by public deposits? And what are the limits for each of the NBFC? So each NBFC has a different limit for their public deposits. There are requirements that the maintenance of liquid assets based on the public deposits. Okay, but having said that, there is a general requirement also. Okay, that each and every public deposit scheme or fixed deposit scheme should be having a credit rating of minimum investment grade, and that should be approved by credit rating agency every year or at least once a year basically. So there should be a credit rating given to that public deposit scheme, okay, once a year. There are requirements pertaining to rate of interest. There are requirements pertaining to public deposits from non-resident individuals for period of public deposits. So there are a lot of requirements which are given in this particular master direction. I'll suggest if you want to read further, you can refer to this master direction. But as of now, I will be covering that. Okay, this is that's whatever limit is there applicable to a particular NBFC, whether that limit, public deposit are within those limits or not. So that is the one. Okay. Now public deposit can be from shareholders, can be from by way of public issue of non-convertible debentures or non-convertible bonds or any other type of public deposits. Okay. Second, if these public deposits are above limit, then whether they are regularized, okay, then whether they are regularized in the manner that is provided in these directions. So regularized means whether they are brought within the limit or those additional requirements have been complied with for the regularization. Okay, some may include repayment, some may include increasing our asset base. So there are different requirements for regularization. Okay, so whether these regularization requirements have been complied with in case when they are exceeding the limit. Okay, so that is the second. Then third is that whether minimum investment credit rating has been taken from the particular authority. So as I told you that company NBFC cannot issue public deposit without minimum investment grade credit rating. So whether the NBFC has issued public deposit without that credit rating or not. So whether NBFC is accepting public deposit without minimum investment grade credit rating. MIGCR, that is minimum investment grade credit rating. Okay. Now this credit rating is from the approved credit, agency. It should be from approved credit agency. Okay. And when I say approved, that is approved by the, that should be approved by SEBI. So these credit rating agencies are basically approved by SEBI, and that is that like then only they are allowed to issue their credit rating. Okay. Now this was with respect to accepting of deposits. Second is, like other than this particular deposit one, there are other requirements also applicable to deposit accepting NBFCs. That is capital adequacy ratio. So whether capital adequacy ratio disclosed in the return submitted to bank, capital adequacy ratio disclosed in the return to bank, or when I say bank to means RBI. Okay, to RBI. Okay, has been correctly determined. Has been correctly determined, and whether that is in line with CRAR requirement. Okay, then whether that is in line with CR and AR requirements. Just give me a minute. Now, two things here we need to see, that is correctly determined CAR and line with CRAR requirements. Okay, just to show you which return is this. Okay, generally what happens is NBFCs are required to submit certain returns. Let me show you that one. So NBFCs are required to give certain returns or submit certain returns to RBI. That is, some may include on financial indicators, some are on prudential norms, some are on liquid asset. Okay, some are on public deposit by NBFC whose COR is rejected. Then asset liability management. There are different kind of returns which are required to be submitted. Some are quarterly, some are monthly returns, some are annual returns. So each and every return has a specific requirement and specific, they are on different based on different ways. So the return which we are looking, okay. So just a minute. The return that we are looking over here for the CAR and for the return that is there, that is also part of and prescribed in the particular what you say, the directions, okay. And in that directions there is a return which known as that NBS return on financial indicators. This is the one on financial indicators, okay. That all the NBFCs accepting public deposit are required to submit, okay. And NBS return on prudential norms. These are the two returns which we are discussing, which includes my capital adequacy, capital asset, and provisioning requirement. So one is my NBS2 return that I'm talking about, which includes capital asset, capital asset classification, provisional and NOF requirements. And second is my NBS1, that is written on financial indicators, which includes capturing financial detail, components of assets and liabilities, profit and loss account, and exposure to sensitive sectors. Let me show you NBS1 and NBS2. So every return has a due date. See, now this is for NBFC-D. Due dates are for NBFC-D. When I say NBFC-D means deposit accepting. So for them, NBS1 is a quarterly. This is 15th of every quarter. NBS2 is also quarterly, again 15th of every quarter. Okay. Now, non-deposit accepting. For them, NBS1 and NBS2 is not applicable, so you won't find in this particular chart. Okay. So different NBFCs have different return requirements. Okay. So I'll show you. Just give me a minute. Let me show you the return. I'll just show you for your understanding, and you will be having you will have a better understanding if for that. Just give me a minute. I'll show you. Because most of these returns have been now digitalized through Cosmos. Okay, I'm trying to access to my Cosmos. If I can show you some returns over there, that will be very helpful for you guys to understand. Or otherwise, what do you do is otherwise I maybe in next lecture also I can show you one of the pre-filled return if possible. But these all returns are now submitted through Cosmos. Okay, and the revised formats are available on that particular portal. So this return that we are talking about is NBS 1 and NBS 2. Okay. I'll continue till the time I'm able to access the portal. I don't know why, if the site is down, I'm not sure, but okay. Okay, we'll continue till that time. And the due date is of next month for quarter. Quarterly. Okay. Okay. Now this was with respect to the correctly determining the details in the written. In respect of credit rating, there is one more criteria, that is for each and every credit rating. Okay, there is a limit prescribed. We discussed as of now here that if whether that is an above limit or not, but that was for the public deposit. Same way, okay, same way the credit ratings are required to be taken every year for each and every public deposit. Now what additional required is here is that in next point, for NBFCs accepting deposit. Now, now, if the credit rating has been obtained, okay, so earlier requirement was that whether the credit rating has been obtained, okay, from a minimum investment grade credit rating agency of minimum investment grade credit rating, okay. So whether the credit rating has been obtained, okay, that was the earlier requirement. Now the additional requirement is that if the credit rating was obtained, whether the same credit rating is in force. So during the year, it may happen that the company's credit rating may change. So whether the same credit rating is there or not. So if there is a change, then the change is required to be intimated within 15 days. The NBFC is required to intimate, not auditor. Okay, but we are required to check whether the credit rating is in force or not. And each credit rating prescribes an amount, maximum amount for the public deposit for a particular scheme, so that the aggregate deposits outstanding at any point, okay, has exceeded the limit specified by credit rating agency. Okay, if at any point in time, if the limit has exceeded the specified limit by credit rating agency, then we need to report the same. Then another point we are required to report is whether any provisions of public deposit regulations या directions are violated. Now, which are these public deposit directions? These are the public deposit directions I specified over here. Master direction on non-banking financial companies accepting public deposit, Reserve Bank directions 2016. So any such direction has been violated, whether company has violated any such directions, or the next point is whether company has defaulted in paying the interest or principal okay of deposit. Do you remember any such, now this particular point, whether the company has defaulted, where this point is also required to be reported? Like for example, if a company has defaulted in payment of interest or principal amount, where else you are also required to report this particular thing as an auditor? Quick question. So we are required to report for in the statement, but other than this, where we are required to report? Absolutely correct, Kaushiki. So I'm asking that, okay, in this particular statement, we are required to report whether company has defaulted in paying interest or principal. But other than this, where we are required to report this particular thing, whether the company has defaulted in paying interest or principal on deposit. There is one such more area, one such more, applicable area where we are required to report this particular thing. Come on, guys. Pretty easy. Trust me, we have already discussed that one. We have already discussed that one. Where the company is required, where we are as an auditor are required to report for this default. So the default, if there is any, is required to be reported under CARO also, repayment of dues, para 3(9). If the public deposits are through by way of debt securities. So public deposit includes debt securities also. If that public deposit is through debt securities and we have defaulted in debt securities, that will cover here also. Like whether the company has defaulted in repayment of loans or other borrowings, or in the payment of interest thereon to any lender, including borrowing from debt securities. So that is required to be given to here also. So it is covered under CARO para 3(9). Okay. So it's same like, another reporting requirement goes to my CARO 2020 para 3(9). Okay. Now 269 ST is something, in someone has also answered 269 ST of income tax or form 3CD. See, clause 31 in form 3CD, which talks about, acceptance and repayment of loans and advances. Okay. That is required to be given when the assessee has, paid that amount. But there are exceptions also. If you see that particular paragraph or that clause, it is written over there, which things are not required to be counted in this particular section. So it's not 269 ST here. But ST talks about if there is a payment, even though ST talks about we pay it. But in case of default, it will be CARO. Okay. Then we are required to report whether the company or NBFC, basically, whether the NBFC has complied with the prudential norms. Okay. Now, what are these prudential norms and where these are coming from? See, there are two types of prudential norms. Okay. One, they are specified under NBFC, SI, ND and NBFC, ND regulations. Okay. These are prudential norms are specified under these regulations. Plus, there are other norms also, prudential norms, which are time to time issued for in the notification or in directions, and they are clubbed into a master direction. Okay, I'll just ask one question. Okay, like just to have a clarity. Some of you guys might be are having this particular doubt. What is the difference between master directions over here and the directions? So if you'll see, I am specifying the word master direction at places. So who can tell me what is the difference in the directions and master directions? Who can tell me the difference between directions and master direction, and why everywhere I'm writing the word master direction? See, master direction. Why this is there? It's not related to something, what do you say, that will be asked. But again, that's the good to have a clarity. Okay, I'll tell you. See, directions are like rules for the act. Directions are like rules for the act that is there for sure. Okay, but when I talk about master direction, they are nothing but the compilation of all the directions. What happens is RBI from time to time, okay, they issue multiple directions. Okay, multiple directions from time to time. But what it does also, they RBI prepares a document sort of thing which combines all the directions issued till date and call it as a master direction. And that is also covered. I'll show you one of the directions if I have. Yeah. So let's say, for example, this particular directions. These are also master direction, NBFC non-financial company return. If you go at the end of each master direction, okay, each master direction, so it will say list of circular and part thereof refilled with the issuance of this master directions. So which circulars has been repealed and which are combined under this one master direction. Okay, so at the end of each master direction, you will have a list of circulars which are combined herein. And even in certain cases, you will find a separate link or separate, reference has been given to a particular direction issued separately. I may not have that one as of now, but that's the concept of master direction over here. Individual directions combined together, making a master direction. Okay. So when I talk about these master directions, means from time to time, the individual directions which are then issued, combined together and made in a single documental format, all the directions that are the master direction. Okay. So that is one of the understanding point. Okay. But in terms when we talk about that, these directions are issued by the RBI from time to time. Okay. And these are required to be complied with. Now, coming to the prudential norms. As I told you, majorly two master directions and in any other direction, subsequent direction, which is not clubbed under the master direction is required to be followed. Now, very important point is that for this, we need to understand which are the prudential norms. Now, which are we required to, report on to, whether the NBFC complied with the prudential norms. Okay. So we need to comply. We need to report that which are these prudential norms. Okay. Now again, prudential norms are bifurcated, as I told you, for deposit except non-deposit systematic important, and for non-systematic one and non-deposit accepting. Okay. So let me create a bifurcation over here. NBFC, SIND, or NDSI, whatever you want to call, or NBFC, ND. Okay. Now, prudential norms are with respect to asset classification, income recognition, and provisioning of assets. So these are the prudential regulations and prudential norms. So first, with respect to income recognition. Okay. Now, the prudential norm says that the income, okay, income for a particular NBFC, okay, can be recognized based on the various ways, like, depending upon the type of the income. But usually the income, including interest, any other lease lenders, charges, discounts, okay, are required to be recognized based on the accounting principles. In case of specific, let's say, for example, NPA accounts. So for NPA accounts, sorry. For NPA accounts, the income are required to be recognized. Okay, the income are required to be recognized when they are actually realized. Same, actually realized. At that point in time, income is required to be recognized for NPA account. Okay. In case of moratorium that was granted during the period, okay, and there was a repayment for the repayment of interest or any income that has been recognized in that particular period, that should be classified as a standard one only. So that is separate one. Okay. Now then, let's say, for example, a bank has issued a moratorium, okay, for the repayment of interest. Now the interest income on that repayment of interest will be recognized. Okay. Let's say, for example, once that asset becomes NPA, after the moratorium period is over, the capitalized income is not required to be reversed. So income on moratorium period okay. So if there is any income which is recognized in moratorium period, that income is not required to be reversed. Income is not required to be reversed even when account after moratorium period becomes NPA. Generally on NPA, we are required to recognize on actual basis. But even in the case of this one, even though account becomes NPA after moratorium, we will not reverse the interest recognized. Clear? Okay. That is for both of the cases. Both cases same. Interest income on repayment of interest during okay. Then income from investment. Okay. Income from investment, let's say for income from dividend or shares, are required to be recognized on cash basis. On cash basis. Okay. And if the payment rise has been established, okay, income from shares of corporate bodies, the dividend has been declared, okay, in AGM, and the right of payment is established, then only you can recognize on accrual basis. If right to receive payment not established and if right to receive payment has been established. Then it will become accrual basis. Okay. Income from bonds, from government security bonds, okay, and corporate bodies, accrual basis. This is income from dividend on shares. Then income from bonds, again on accrual basis, irrespective of the right. Irrespective of the right, it will be recognized on accrual basis. Okay. As of now, everything is same for these both. There is no difference in, with respect to some of the income criteria. Income criteria are same for both of the NBFCs. Okay. Then asset classification. That was income. Now comes to the asset classification. Asset classification, how it works, and very important here, we'll see a difference for the asset classification. Now, usually asset is classified into standard, substandard, doubtful, and loss asset. So, what is the definition here given for the standard, substandard, and doubtful? Okay. For NBFC, this is systematically important. Okay. Substandard will be substandard means non-performing NPA for a period less than 12 months. And for non-deposit accepting, non-systematically important NPA for a period less than 18 months. Okay, here we have a difference. Okay. Then if it exceeds that particular one, it will be a doubtful. Okay. Now NPA for a period greater than 12 months, and here it will be NPA for a period greater than 18 months. If that is the case, then it will become a doubtful asset. Now, doubtful asset again is divided into various categories. Okay, and on the basis of which appropriate provision is required to be taken on doubtful asset. Okay, so in case of a doubtful asset, so provision will define based on the period that I will cover in a while, but that is there for then that will be different for both of the doubtful assets. Now, here we are talking about NPA. So for doubtful, for substandard, and we are talking about NPA. But what is NPA over here? That is very important to understand. Okay. Now NPA will become when, in respect of any asset, whether interest or unpaid interest, including installment, okay, anything which is overdue for a period greater than 3 months from due date. Okay, and for non-systematic, non-deposit taking, it is overdue for period greater than 6 months. Okay, and in case of lease rental or hire purchase, this particular 6 months will become 12 months only here. So in case of lease rental / hire purchase, it will be counted NPA if greater than overdue greater than 12 months. Here it will be 3 months. In case of my NBFC, systematically important non-deposit, 3 months. No change. Clear till now? Okay. So moratorium period 1 again. Okay. So what happened during COVID period? A moratorium was provided. Okay. Let's say, for example, there was a loan or rupees, let's say 10,000 given, okay, with an interest of rupees 100 per month. Hypothetical example. Now there was a 3-month moratorium period was provided, wherein interest of 3 months was accumulated and converted into loan. That is, here in the current case, in this example, will become rupees 300 for 3 months. Now this was done on start, but for those 3 months there will be interest calculated on this 300 rupees, interest on rupees 300, because this has now been converted to the loan, and that will be calculated, and that will be charged again, let's say, for example, at the rate of 1% per month. This is 1% per month. Same here also taken. So 1% per month, that is rupees 3 per month. Now for the period of 3 months, till the time the person was not required to pay any amount, this 3 rupees per month was recognized as an income. Rupees 3, total rupees 9 was booked as interest income. although it has not been received. Let's say, for example, later on this particular account, this particular loan account, after moratorium period, okay, became NPA. So in case of NPA accounts, the interest which is recognized, booked and not realized is required to be reversed. But in this case, this particular interest will not be reversed. This interest is not required to be reversed. Even account becomes NPA. So that is the concept of the moratorium interest that I was talking about. Okay. Now there is one question: why there is a higher period for the NBFC ND, that is non-deposit accepting, non-systematically important, and lesser period for systematically important? Because SI is important, higher asset. So for them, if any accounts become NPA, they need to report it quickly. Okay, this is the account NPA, and quick action can be taken. That's why it has a lesser period. Non-thematically important and non-deposit taking. Clear? Any doubt? Any doubt? Okay. Now, each and every like there are additional requirements with respect to clarification of asset classification. This is the asset classification, doubtful, standard, NPA. Okay. Now there is an additional clarification which was recently introduced. Okay, and that is with respect to there is a new terminology, or you can say it was there but has been now emphasized more, that is special mention accounts, SMA. Okay, or NPA. Now what is the scenario is that the classification dates for each and every NPA or special mention accounts should be pre-specified, and that should be what you say, categorized into various categories. Okay, now for example, let's say over here, if it is overdue for the period of 3 months, it will become NPA. But what if it is overdue and not 3 months has passed? What I will do? In that case, a new concept has been brought in, which is known as SMA, that is special mention accounts. These are the accounts, special mention accounts are the accounts wherein, okay, wherein these accounts sorry these accounts, okay, are required to be tagged as a special mention account even if they are overdue for more than 1 month or 1 day. So no need to wait till 3 months. You need to tag a account SMA if it is overdue. SMA has 3 categories: SMA 0, SMA 1, and SMA-2. SMA-1 means overdue less than 30 days. So it has become overdue, but not 30 days has passed. SMA-2 means 30 days, okay, overdue more than 30 days, but less than 60 days, 30 to 60. SMA-2, 60, overdue more than 60 days, but less than 90 days. And above 90 days, by default, it will become an NPA. Okay. Same way for non-deposit acceptings and non-systematically important, SMA-0, that is less than 30 days. SMA-1, that is 30 to 60. And SMA-2, that is 60 to 180. Why 180? Because overdue limit is 6 months over there. So now if an account becomes overdue, first you categorize as SMA, and then you categorize as an NPA. And then based on NPA, it will be substandard, doubtful, and all those things. Clear? Okay. Any doubt with respect to this one? Any doubt? SMA, NPA, doubtful, substandard. SMA is something you can say, it's a newly brought thing recently. Okay. So it was a recent circular by which it was introduced. So there is a question: lease purchase and hire purchase, lease rentals and hire purchase, how that they are coming into the NBFCs. There are certain NBFCs which are involved into the leasing, hire purchasing also. So that is for them. As I told you, various types of NBFC are there. So depends upon the type of NBFC. So there is a question that how interest can be recognized for an account become as an NPA for the moratorium period. See, that's the guideline. You are not required to reverse it. That's the guideline says. Okay, we need to follow the guideline basically in that case. Okay. Now I'll talk about, this was some of the prudential norms with respect to the asset classification. Just a minute. This was some of the prudential norms with respect to the asset classification. Okay. Now, based on the asset classification, the next requirement comes is for the provisioning. Asset provisioning. Again, I will bifurcate in this case also between NBFC, SIND, and NBFC, ND. When I talk about NBFC, SIND, okay. First, loss asset. What is the provision requirement? For the loss asset, 100% is required to be reported as a provision. Okay, 100% at both ends. Okay, now doubtful has two parts. One is unsecured and doubtful. Again, that will go into 100%. Then comes to the secured. Now in secured, we have different categories up to 1 year, then 1 to 3 years, more than 3 years. Okay, 1, 1 to 3 and more than 3. So for that, secured up to 1 year, 20%, 30% for 1 to 3 and more than 3, 50%. Whereas in case of this particular NBFC ND also same, 20, 30 and 50. Then comes the substandard. Substandards require a general provision of 10%. Okay. And in case of both, it will be 10% general provision. Now, the way we were bifurcating secured and doubtful, here in standard, we are not required to bifurcate. We are required to provide 10% on the total outstanding. That's a general provision. So that is the requirement for provision. Now there are additional requirements with respect to the hire purchase, lease assets, how their depreciation is required to be calculated, their value of asset is required to be calculated. I will not go much detail in that. Now comes for the standard asset. We were talking about asset which was substandard. For the standard, it is 0.4% of total standard assets. Okay, for this NBFC, SIND. For NBFC, ND, that is not systematically important, it is 0.25%. Okay. So that is the one. Now there is one small difference with this provision of standard asset. When I talk about provision, till now the provisions were required to be adjusted against gross advance. So whatever advance was there, these provisions were required to be adjusted against those gross advances. Provisions were required to be adjusted against that gross advance. Okay, in front of which we made a provision. Same goes with my both NBFCs. But for these two, okay, provision is required to be shown under the head contingent provisions against standard asset. Against standard asset. and that is not required to be netted. Okay, this will be shown separately because this is not what you say, reducing your not reducing your advance, but it is a general provision. Okay, what are standard assets? So I have a question. What are standard assets? Standard assets means which are not which are not, overdue or NPA. Clear? Any doubt? Okay. So these were the prudential norms for income recognition and asset classification and asset provisioning. And these are the norms I need to report in my statement whether the NBFC complied with the prudential norms. So these are the prudential norms. Okay. Now we discussed the prudential norms that is there. Then what we are required to discuss is, we are required to report is whether the company or whether the NBFC has complied with liquid asset requirement as prescribed under BI Act. Okay, so there is a liquid asset requirement that is there, plus whether NBS 3, okay, and whether NBS 3 has been filed. That is a return where we disclose what is the liquid asset requirement was and how we have complied with, and whether NBS 3 is filed. So that is the one of the area that we need to report to. Then another thing is whether the NBFC has filed quarterly return on prudential regulations or norms, that is NBS 2. Remember quarterly that I discussed, but I'm not able to show you because the portal is not working as of now for me, so I cannot show you a live example of NBS. Okay, and I'll try to get it in the next lecture, but that is the one. Then whether the NBFC has complied with public deposit directions. Okay, has complied with the public deposit directions in case of opening of new branch, closing of existing branch, okay, then changes in appointment of the agent, or there is a different agent for a particular branch, so appointment of agent. Then whether these provisions of public deposit directions has been complied with or not. That is for NBFC accepting deposit, audit requirement or reporting requirement. Clear? As of now, there is no provision for special mention accounts, SMA, that will cover part of my standard, because they are not overdue or they are not NPA as of the date. If they are not NPA, we cannot classify into substandard or subsequently. So that will be covered in the form of only standard. That was this was the audit requirement for NBFC accepting deposits. I hope I'm clear. Okay. Then let me show you if I have something I can, show you in detail. If I can get one of the copies, I'm searching for one of the copies pertaining to this particular reporting that is been done to the bank. If I can get, it will be, good for, very good for me to show you. Wait a minute. So just a minute. Let me show you one of the examples so that, it will be easy for you to understand how actually it is done. It's MR. No. Okay. As of now, I am not having that particular one, but I can show you once I'll receive that. I can show you that particular, that reporting that has been done in any of the case if I find. But that is, these are the only items that we discuss are again reported in that particular one, in that particular report that is submitted to RBI. The point is that report is usually submitted to the RBI and usually not available to the general public forum. But that's why I'm trying to find one of the report which is, available in the general public so that, I can show you how it works. Okay. So this was for the deposit, systematically important and this was for the as NBFC accepting deposit. Now we will see, okay, for NBFCs not accepting deposit. Quickly, I will discuss that particular part. Okay. In case of non-accepting deposits, what are the requirements? So the requirement is that I shall, as an auditor, I need to include whether BOD resolution has been passed for not accepting deposits So first of all, whether BOD resolution has been passed. Second, whether the company has accepted any deposits, whether the company has complied with the prudential norms, whether the NBFC has complied with prudential norms. Okay. In respective of, like if the NBFC is, what you say, systematically important and non-deposit accepting, so NBFC, SI, ND, if that is the NBFC, then whether CAR disclosed in written submitted to RBI in NBS 7, okay, has been correctly arrived. Second, this is a basically NBS 7 return, okay. And another thing is whether the other things, annual statement on capital fund and risk asset exposure, everything on the NBS. Second is asset exposure. Asset risk exposure or capital funds. Has been furnished in NBS 7. Okay. So two things for NBS. One, CAR disclosed, that is capital adequacy ratio, disclosed is correctly arrived. Second, risk exposure, capital funds, asset risk has been appropriately furnished in NBS 7. Okay. Then so this is for NBFC non-deposit and NBFC SI both. So whichever NBFC is there which is not accepting deposit, it's applicable for them. The points we are discussing. Whether NBFC has correctly classified itself, means classification based on the activity or business, that is this one type of NBFC, IC, CIC, MFI, or you can say whether it's NBFC NDSI or NBFC ND, whichever it is. So whether this NBFC has been correctly classified so that we can identify which regulations are applicable to them, that is required to be reported in your statement. Okay. If anywhere there is an unfavorable comment, you are required to provide reason for the such unfavorable comment and the qualification in detail. Clear? That is the requirement for audit report, auditor statement over and above whatever we have seen in the till now in company sector or Caro. So whatever we have seen in company sector and Caro, over and above that, this is additional reporting requirements for three type of NBFCs. That is accepting deposit, not accepting deposit, and general. Clear? Any doubt? That is a requirement. So there is one question, why we require BOD resolution for not accepting deposits. That is one of the requirement. If you are classifying yourself under the category of not accepting deposits, you need to comply with the regulation, and one of the regulation is that should be approved by BOD. Okay, guys, see, today we discussed a lot of theory, lot of things, lot of provisions. I showed you the statements, returns, the master directions. We discuss in detail each and every part which is applicable to NBFC from the RBI master direction point of view. Okay. Now you know what is required to be checked when it comes to the NBFC. Now the next part is in the next lecture, what I will be covering for the NBFC is, okay, one, I will be covering an important area, that is scale-based, norms. So there are new norms which are scale-based, the term is scale-based regulations, SBR. So I will be discussing the scale-based regulations that are applicable to NBFC. These are applicable from 1st October 2022. Okay, mandatory for each and every NBFC, and there is a different categorization that has been adopted in that. We need to understand how the current categorization, that is this type of NBFC, and the type that we will be discussing in SBR has been merged. One, that. Second, after that, I will be covering all the questions, MCQs, and on full topic. Okay, so SBR will take around 20-25 minutes, not more than that. Rest of the lecture, I will be fully, covering the questions of NBFC. For that, I want you guys to revise whatever we discussed now, so that in the next lecture, when I'll take MCQs, I take questions, it should not be the case that you are not aware with the, the things we have discussed now. Otherwise, there will be no point of, discussing questions or MCQs. The purpose of this lecture, taking theory together all was just to have a good clarity of all around reporting for the NBFC, and when we are attempting the questions, everything is there. We can answer it. Please provide your feedback. If you like the lecture, if you didn't like, what you want improvement, anything, it will be very helpful for me. Okay, if you need any additional thing, I'll be happy to include that in my lectures, and it will be a good feedback will help me to provide you the things or the way in which you require. Okay, guys, be prepared for the next lecture, and please provide your feedback. Okay, thank you. If no further queries, then we'll conclude this lecture over here, and thank you for participating and attending the lecture. Thank you.